Welcome back to Investing Talk Podcast. Today, we're going to break down everything you need to know about C3.ai and its upcoming earnings report. This is all about getting you well-informed quickly and thoroughly.
Exactly. Our mission is really to unpack the crucial details and insights from the latest analysis on C3.ai so you understand not just the numbers, but what they truly signify, for the company and maybe even the broader market.
And hey, if you find this helpful, please remember to subscribe, like, and maybe leave a comment. Your support really helps us bring you more of these insights. You could even consider buying us a coffee. And if there's a specific company you'd like us to look into, please leave a comment below after we wrap up today's discussion.
Okay, let's jump right in. We're talking about C3.ai. Their next earnings report is set for September 3, 2025. That's after market close, specifically 5:00 p.m. Eastern Time. Right, and what's fascinating here, looking at the immediate horizon, is the analyst consensus. For revenue, expectations seem quite aligned with the company's own preliminary guidance. They're projecting somewhere between $70.2 million and $70.4 million. Pretty tight range.
Okay, so alignment on the top line. That sounds somewhat predictable, at least.
It does. But when it comes to earnings per share, or EPS, well, there's a significant divergence we need to unpack. You've got Zacks estimating an EPS of minus 15 cents.
Okay.
But then Nasdaq reports a consensus of minus 81 cents for this quarter.
Wow, minus 15 versus minus 81. That's a huge difference. What does that tell us?
It tells us analysts are really split on how efficient C3.ai is operationally, maybe how quickly they're converting that AI demand into, well, bottom line results. It's a big point of interest itself, that wide range.
And what about the whisper number, those unofficial estimates floating around? Anything there?
Precisely. We haven't seen a definitive whisper number circulating, which usually suggests expectations are probably pretty much in line with those public consensus estimates. Fewer hidden surprises from that angle, maybe.
Okay, no secret higher or lower number making the rounds.
Seems that way. And we also have the company's own preliminary guidance they put out back on August 8th. They affirmed that $70.2 to $70.4 million revenue target. They also gave figures for GAAP operating loss. That was $124.7 million to $124.9 million. And the non-GAAP operating loss, which often gives a clearer picture of core operations, was $57.7 million to $57.9 million.
Still significant losses, though.
Absolutely. But importantly, they also reported a solid $711.9 million in cash equivalents, and marketable securities as of July 31st. That cash position, that's going to be a key point for a lot of investors. Given those losses, it's their buffer.
Right, provides that runway. Okay, here's where it gets really interesting for me. How has C3.ai actually performed in the past, and how did the market react then? Does history give us any clues?
Yeah, looking back is crucial here. If we connect this to the bigger picture, C3.ai's past 4 quarters have shown, well, kind of a mixed bag of results and reactions. It's not straightforward. For Q4 2025, they actually beat EPS expectations by 4 cents and revenue by about $1 million.
Okay, a beat. So the stock flew.
Well, it gapped up initially, yeah, but then it retraced some of those gains. Suggests the market liked the beat, but maybe dug deeper and wasn't fully convinced long term.
Interesting. What about Q3?
Q3 2025, EPS actually missed estimates, but revenue was in line. That led to a modest sell-off initially, but then it reversed after the company reaffirmed its guidance.
So guidance trumped the miss.
It seems so in that case. Forward-looking statements mattered more. Then Q2 2025 saw both EPS and revenue slightly beat estimates, and that resulted in a rally that actually held its gains.
Okay, but more sustained positive reaction there.
Right. And Q1 2025, results basically met estimates, and the stock reaction was pretty muted, kind of flat.
So a history of volatility post-earnings, definitely not a consistent up or down pattern. What does this all mean for key trends? Is there a trend in the noise?
Well, it definitely raises an important question about their trajectory, doesn't it? Over these last 4 quarters, revenue growth averaged roughly 20-25% year over year. That's pretty solid.
Yeah, that's decent growth.
It is. And while the GAAP operating losses are still substantial, there has been a slight improvement, it seems, in cash reserves and maybe some operating expense controls, which is, a positive sign for the long term, maybe getting a handle on the burn rate.
But the losses are still the elephant in the room.
Oh, absolutely.
Huh.
There's still a significant factor to consider. The trend might be slightly better management, but balancing that growth push with a clear path to profit, that's still the core challenge investors are watching.
Okay, so beyond the numbers and history, what's actually been happening with C3.ai this quarter? Any big news? Partnerships? Anything significant?
Yeah, this quarter did see some positive catalysts, actually. C3.ai announced new enterprise AI application deployments with global customers. Now, specific names weren't disclosed in that preliminary report, but it shows they're closing deals, right? Implementing their platform.
Which is key for enterprise software.
Exactly. They also secured partnership agreements within the defense and manufacturing sectors. These are important sectors for them, often with long, sticky contracts once you're in.
Defense and manufacturing? Okay. Anything else major? Mergers? New products? Leadership changes?
Interestingly, no. No major M&A, no big new product launches announced this period, no leadership shakeups. It suggests maybe they're really focused on execution right now. Head down, delivering on the current plan.
Focus on execution, all right. And zooming out a bit to the broader market, how do the sector trends, the macroeconomic stuff, play into C3.ai's story?
Well, the environment is quite dynamic, as you expect. Demand for enterprise AI that remains really robust, especially in those industrial and government areas C3.ai targets. That's a definite tailwind.
Good for them.
But the tech sector overall, it's faced volatility. Heightened interest rate sensitivity tends to pressure software stocks, especially growth stocks like C3.ai, where valuation depends heavily on future earnings.
Right, higher rates make future profits less valuable today.
Precisely. On the positive side, though, the U.S. macro backdrop seems to show pretty stable IT budgets in government and Fortune 500 companies. That stability is good for C3.ai's potential customers.
Okay, so strong demand for their specific niche, but broader tech and rate headwinds. What are analysts saying overall?
Analyst commentary has been pretty steady on price targets lately. No major upgrades or downgrades that stand out. Generally, they point to maybe improving visibility, a potential path to profitability, but it's heavily dependent on that margin trajectory and, crucially, future deal flow. They need to keep signing those big contracts.
Oh, okay, got it. Let's talk about what the market might be anticipating. How has the stock been behaving leading up to this report? And what are options traders signaling about potential volatility?
Yeah, what's fascinating here is the pre-earnings price action. The stock has actually ticked up about 4% in the week leading up to the report, right after that preliminary revenue update came out.
So some buying ahead of the numbers.
Seems like it.
Right.
We've also seen elevated volume, which usually suggests investors are positioning themselves, expecting a significant move one way or the other.
Makes sense. And options. Calls or puts winning out.
Well, the call-put ratio has skewed towards calls in the last few sessions, so some bullish sentiment there in the very near term, people betting on an upside move, though overall open interest seems generally balanced across different strikes, so not a totally one-sided bet.
Okay, so maybe some short-term optimism creeping in. But what about the size of the expected move? That 4% move is one thing, but what are options pricing in for the earnings event itself?
And this raises that important question about risk, right? The options market is currently pricing in a substantial move. We're talking plus or minus 20 to 22% swing for the earnings event. That's based on the at-the-money straddle pricing.
Whoa, 20 to 22%. That is huge.
It's significant implied volatility, yeah. It really suggests traders are anticipating a very strong reaction. Could be up, could be down, but likely not flat. High uncertainty baked in.
Okay, with that kind of implied volatility, let's game this out. What would a bullish scenario look like? What needs to happen for C3.ai to potentially make that big positive move?
So from a bullish perspective, you'd want to see more than just meeting estimates. A strong beat on both revenue and EPS. Ideally, that loss comes in much smaller than forecast, right?
Beating the numbers? Check. What else?
Critically, an upward revision of their full-year guidance for fiscal 2026, especially on revenue. That signals confidence. Also concrete evidence of new large enterprise contracts, maybe naming some names this time. That adds credibility.
Yeah, proof of that deal flow.
Exactly. And if margins stabilize or show clear improvement, indicating that cash burn is genuinely decreasing, that would absolutely fuel rally. Investors need to see that path to profitability becoming clear.
Got it. Beat, raise guidance, show big new deals, improve margins. That's the bull case. Now, flip side, what about the bearish case? What could send the stock tumbling by that 20% or more?
Well, a bearish scenario could start with revenue missing even their own preliminary range. That would be a big credibility hit after reaffirming it.
Oof, yeah, that'd be bad.
Or if those non-GAAP losses widen unexpectedly. That signals things are going the wrong way on efficiency. Weak forward guidance for FY 2026 would be a major red flag, suggesting growth is slowing or maybe competition is heating up more than expected.
Right. Guidance is key.
Absolutely. Muted news on new contracts, signs of slowing demand, those would raise concerns. And any indication of issues with cost control or hints they might need more cash soon, that would likely weigh very heavily on the stock. Fear of dilution, continued losses.
Okay, so miss wider losses, weak guidance, slow deals, cost issues. Lots of potential pitfalls. So with all that, what's the single most important metric you'll be watching on September 3rd if you had to pick one?
If we connect this back to the bigger picture, for a company like C3.ai right now, the most critical metric isn't just the raw Q1 numbers, the revenue or EPS for this quarter. It's really their forward guidance for FY 2026 revenue and, crucially, their outlook on margins.
The forward look.
Yes, investors, especially in growth tech, prioritize signs of sustainable and profitable scaling. So that guidance, what they say about the next year and their path to profitability, that tells us much more about the long-term health than just this quarter's snapshot. That's what will likely drive the narrative.
Makes sense. Okay, so putting it all together, the high volatility, the mixed history, the losses versus the growth.
Yeah.
What's your overall leaning for C3.ai going into this report? And maybe what should listeners think about if they're considering the stock?
Yeah, considering all these factors, my overall leaning heading into the report is probably neutral to bearish.
Neutral to bearish, okay. Confidence level.
Confidence score,
Yeah.
maybe a 5 out of 10, so pretty uncertain.
Why neutral to bearish given the potential AI tailwinds?
Well, the rationale is, while that strong top-line preliminary guidance is likely partially priced in already after the update, that path to profitability, it just remains unproven, right? And with expectations elevated combined with that super high implied volatility, it means any kind of disappointment, even a small one, could get significantly magnified to the downside. The market wants proof on profits, not just growth promises.
Okay, high bar, high risk. So this raises an important question about strategy. What options do listeners have depending on how much risk they're comfortable with?
Right, it really boils down to risk management here. For risk-averse listeners, the most prudent strategy is probably just to wait. See the report, hear the commentary, let the dust settle before making a move.
It's on the sidelines.
Pretty much. For those who are more risk-tolerant, you could consider using options to play that potential big move, maybe a straddle or a strangle, designed to profit from a large move in either direction. But, and this is key, you have to size the position carefully because the options themselves are expensive due to that high volatility. You're paying a premium for that potential.
Right, expensive lottery tickets, almost.
Could be. Owning the shares directly through earnings, that's very high risk given that potential 20–22% swing. You need conviction or tolerance for a big move against you.
And selling options. Selling that volatility.
Ooh, selling volatility, like short premium strategies, that would be exceptionally risky here unless you're very confident and potentially hedged. A big move against you could lead to substantial losses quickly. Caution is definitely the word.
Definitely sounds like a situation demanding caution. Okay, so as we wrap up our look at C3.ai's upcoming earnings, it's clear there's a lot for investors to chew on. The market's pricing in fireworks, revenue seems stable for now, but that road to profitability and the all-important forward guidance, those are the real keys.
Exactly. And this raises, I think, an important question for you, the listener, to consider as you watch this unfold. What does C3.ai's performance, particularly that forward guidance on revenue and margins, tell us about the broader market's real appetite right now? How much patience does it have for long-term enterprise AI potential versus demanding more immediate profitability? It's a fundamental tension we're seeing across many growth sectors, isn't it?
It really is. A great thought to mull over. Thank you for joining us for this detailed discussion today. We hope this has given you a clearer picture of what to watch for with C3.ai. Remember to stay informed, stay cautious if you need to, and we'll be back soon with more insights right here on Investing Talk Podcast.